For that, we'll bring in Rosenblatt's Barton Crockett. He has a buy on Meta, Alphabet, Amazon's got a hold on Apple. Barton, I would assume your assessment so far of earnings season is a positive one, or would that be incorrect?
Overall, I think it's been a nice earnings season. We've liked some of the tech names, not all of them. We've liked the companies that have an opportunity for revenue acceleration and margin expansion, which we think is an unusual feature of the Internet Group. And we've seen those themes be enhanced with the earnings report last night at Pinterest, which we also recommend, as well as Amazon. And we had a constructive read from Google and Meta, even though the market was a little bit in disagreement with us initially.
Yeah, although you could say, obviously, we're looking at the response to those numbers from Pins, and that was quite good. But obviously, yeah. Alphabet not. Microsoft, somewhat muted response to what many thought was quite a good quarter. Amazon was up, but again, and Meta, as you point out, I guess people got scared by their commentary about the ad market. Is that worrying to you at all, that it has been a relatively muted response by investors to what you characterize as a pretty positive earnings season?
Well, I think that, coming into this season, one thing that we had observed is that it did feel like there was a nervousness in this group. And I think part of it is concern around what's the trajectory longer term of the macro. And I think that's really what was happening with Meta. The immediate reaction was to the commentary about the war. But everyone knows advertisers pull back in wars, and this war is not going to be overly disruptive unless it expands surprisingly. And so really, I think what that's masking is people are just worried about the macro. And I think the way you protect yourself is you focus on quality and growth. And I think you see that with the stocks that we're recommending in this group.
AI and cloud, obviously so important for Amazon or Alphabet or Meta or Microsoft. Mm-hmm. Not as much for Apple, which I think told our viewers you have a hold on. As we head into the number, what is holding you back from perhaps being more positive on that stock?
Look, I've liked Apple in the past. I did move to a hold, in August, and stocks dipped a little bit since then. I do think that Apple's a great company, but I think that the stock is most interesting when they're pursuing a disruptive opportunity. And I think that could be with Vision Pro, but that's still a ways out. In the near term, we're fighting the good fight on iPhone sales, and this is the most important, the most loved device of the modern economy. But I do think that they've got some easy compares in the December quarter to disruptions, but that's well understood in the estimates. And the stock's trading near kind of a high valuation historically relative to the S&P, and not a lot of argument for a big upside to estimates. So I don't know that you need to be overexposed to Apple right here, right now.
How much of a risk is China?
China is an imponderable risk, right? If everything blows up in the worst possible scenario, Apple, of course, would suffer, but everything would suffer. We hope that doesn't happen, and we hope that we're able to, keep our two economies working together constructively. That seems to me the most probable case, and hopefully, and that's certainly what I'm modeling with Apple, so hopefully that plays out.
I was just sort of wondering about on a quarterly demand side of things, but but there's the bigger risk there too, I guess.
Yeah. In terms of the quarterly demand, that's an imponderable. I do believe that the global units are going to be most important, and I think that the global unit outlook for the third quarter is flattish year over year, and I think that's an okay result. And I think the iPhone 15, trajectory into the December quarters a little bit trickier, a little bit, less well understood. We do believe they have $7 billion of supply chain disruptions in the year ago that they can comp, that can help them grow. But consumers in a little bit tougher position. China's emblematic of that. So that's where I'd be nervous, as on the December quarter for Apple.